Hey everyone, welcome back. Hope you guys are having a great Monday. It's a fresh start to the week. So thank you so much for coming in to watch this video. And we really don't have much to talk about as far as the miners are concerned because there really isn't any much news out there today. The only news that we really had out there was BitDeer's getting a new CEO. That's about it. But we did have some criticisms on Twitter that I would like to kind of go over today regarding Marathon and CleanSpark. So we'll address those topics here. I thought those were kind of interesting to talk about and see if there's any merit to it all. Okay, so we'll get into that. We'll first look at Bitcoin and then go into the other things as well. But as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research. I'm invested in finding coins and companies for full disclosure. And it helps tremendously if you guys hit the like button, subscribe, hit the notification bell as well. That way you guys get notified when I do videos. And the likes do help the YouTube algorithm. So if you guys enjoy this channel, enjoy my content, it would mean a lot to me if you guys could do that. Okay, so let's get into the screen here before I bore you guys with that screen. We are looking at Bitcoin. Bitcoin actually had a really good day today. It was up approximately 3% on the day, 3.03% on the day. Closed at 43,306. So we're again above the 43,000 mark here, which is nice to see. So we're having a nice little rally here. I was thinking we might battle with the 50-day moving average, but we closed above it today, which was nice. We are a little bit down right now, but not too much, so it's not too bad. The miners had a pretty good day here also. The majority of them were up only in the single digits, but some were also down. Noticeable ones here that we'll get into is Cypher was up 13% here. That one was based on, I'm guessing, that the kind of the FUD over Bitfury selling the shares is no longer a FUD. We know what's going to happen there, so I think that's kind of cleared up a lot of confusion in there, so that's good. Cypher's going back up, so that's nice to see. And we also had BitDeer up here, 18.29%. Like I said, not much news out there other than them getting a new CEO. So I think that's maybe why the stock is pumping today. Who else do we have up here that was nice today? Wolf was up 11.24%. Really no news on them. And then we had a couple stocks down. Stronghold, Hut 8, and Cores was down just a little bit here on the day. But overall, like I said, the rest of the miners were kind of in the single digits with a couple exceptions. Okay, so that's it for that one. So let's get into the stories here as far as, well, some analysis, we could say. First, what we're going to do is actually on Marathon. So with Marathon, you basically have like the Mara, not this one. I didn't want to do that one. We're not doing Q&As, we're doing this. So Marathon, there's on the Twitter communities, you have basically the Mara piggies, right? They're always bullish at Marathon. And then there's some of us, not all of us, but some of us are also pointing out some of the shortcomings of Marathon. And the thing that popped up today was basically that Marathon hasn't like been mining much of anything in the last couple of days. In the last 5 days, I think they only mined 5 blocks, which is just really, really low. So got me kind of curious as to why that is. And we'll get through some of this data here, and I'll point some things out and how much it's actually possibly costing them this month compared to where they were in December, where they had like 1,800 BTC at that point. Obviously, we had a lot more transaction fees added into it, but we'll take a look at that. We'll look at the weather also in Texas. So we'll kind of bring everything in as best as we can here, okay? Okay, so as you can see here, there were a couple times during this past year where Marathon has done pretty well 1 month and then fallen back the following month. So you can see here in March of this year, right, they were at 825 Bitcoins mined for that month. And I wonder if I can pull this in as well. And maybe not so much. Let's see here. They were at that point at 11.5 exahash, right? In April, they actually mined less, 702 Bitcoin, but they had 14 exahash at that point, right at the end of the month. So you would think that they would actually mine more here, but they didn't. Okay, now looking into May, obviously we had the transaction fees being added in there, which were substantial, and they were at 15.2 exahash. Come June, they went back down to 979 BTC mined for the month, but their hash rate actually had grown to 17.7 exahash, so a 2.5 exahash increase in their hash rate month over month, but still they mined less. Then we had it also in July. In July, they were at 1,176 Bitcoin. Their hash rate was at 18.8 at that time, obviously grew again. Then it grew again a little bit here in August to 19.1, and they actually mined less, right? And then after that, they've been kind of going downways a little bit, which is kind of what we would expect after September, because as you're not growing and the network hash rate is growing, you're going to start generating less and less Bitcoin. And then when we got into December, obviously December, they look at this also in November, they had 23.2 exahash installed. They actually mined less than they mined in October, right? So there's definitely some curtailing going on, or there's the other thought that popped in my head was maybe they have a certain amount of energy they can use during a month, and some months they can use more of it, but then the following month they have to curtail more in order to get back to like the average for what they can actually get each month. That's kind of my thought here. Okay, and then you can obviously see here for December, 1800 BTC in December, and then they had a 24.6, almost 25 exahash at that time. This December also, we had a lot of the transaction fees being added, like 20% on top of it. So that obviously helped out tremendously for them. And then when we look at the numbers here that we have for January so far, for the 29 days, and I have this data over here someplace, I believe. I have it over here someplace. Put a table in. There it is. Okay. So here's a table. We have all of the days and how much they mined each day for that day itself. So you can see here that on the most part, they're kind of like in the 40s, higher 40s looks like. And then there's days that they are at like only one block here at 6. And there's days where they are like 62 BTC mined for the day. So they're mining a heck of a lot more. They had a 66 day here, a 58 day here, 55 here as well, 55 over here. BTC mined. Then they had a bunch of these 40s, 30s as well, and then 20s. And then just recently here within the last couple of days, the last 5 days, they only mined 5 blocks. They mined 2 blocks today, so that was an improvement. Yesterday, the 28th, they mined 0 blocks. And then the 3 days prior to that, they only mined a block a day. So that got me thinking, is it anything to do with the weather? So when I looked at the weather map here, over here, we can see that in Texas, at least in Dallas, the weather hasn't been too bad, right? We got highs in the 50s, lows in the 40s. Recently here, as far as going back to Saturday, June 27th. So I'm guessing it's not the weather. So what else is contributing to it? Is it because they have to curtail or they have to get back down to their average or what they're allowed to use energy for in those facilities? That could be it. I don't know, right? Be nice to see maybe what Fred has to say. Maybe we'll get an update for, obviously, for January, and maybe they can provide some information as far as why they are down that much. Also, I wanted to take a look at the Bitcoin transaction fees for the month to see how that's impacting it here. So we had a little bit of a spike here on the 14th where we had basically 217 Bitcoins added to the, well, in that day given out. So if you take that divided by 144 blocks, you're getting roughly 1 point something. What is that going to be? 1.5, 1.4 extra BTC per block on average being added to it. So if we look at the 14th here, as far as what Marathon mined, on the 14th, they were actually down to 24.27. So that's kind of surprising. So they actually mined less on that day than they did on prior days where they had more BTC or less BTC transaction fees being added to it. Okay, so I took all this in, and then on average, I said, what if I have 55.59? So max mined using 55.59. I'm actually using here in the formula 55. We could probably bring that down to like 52, I think, on average, based on the amount of transaction fees that were possibly added to it. Maybe we'll do that. We'll just make it 52. That way, some of you aren't crying about it being too high. So there we go. So max using the 52 BTC per day on average that they should have been mining. With the Bitcoin transaction fees, they should have been around like 1508 BTC so far mined for the month. They are at 909. That's a difference of 598 BTC that they are basically, well, not mining, that they could have mined potentially. So that's basically a loss for them for the month. And that equates to about $25.7 million of lost revenue because of curtailment or whatever reasons that are happening in their facilities. That's huge, right? So obviously this critique of Marathon and not being able to basically manage their facilities as best as they can, because most of them are still being hosted right now. They did buy a couple of facilities recently here that's going to allow them to have more control over it. But depending on the kind of contracts that they have with the power electricity manufacturers or the electricity companies, the PPAs that they have in place, depending on what they can and can't do, right? Sometimes they will be forced to curtail. So that's obviously a valid critique here, I think. And like I said, we've seen months where they were up and then the following month they were down. So like I'm saying, it looks like they need to average out what they can actually get electricity for the year, I guess. There's a certain amount that they can get, and that's all that they're able to do with it. But yeah, so overall, if they mined like they're supposed to be at 24, 25 exahash, they should have had about 1,500 BTC mined for the 29 days so far. And that would have equated to about 64 million. So it looks like right now they're about 39 million based on the average Bitcoin price for the month of January so far. And like I said, it's a 25 million loss. So that is a pretty substantial loss, right? I mean, if you do that over do that over 4 months, and you basically got 100 million that you didn't generate because for one reason or another. So I think that is a valid critique of Marathon and their uptimes, efficiencies as well. And the reason for that is because you really want to have operations up as much as you can, because that helps pay down or pay off the miners that you purchased, right? So if you're able to run closer to 100%, you're going to be able to pay those off faster than somebody that's like Marathon here running. I don't know what that's going to be like. I mean, this is pretty bad for the month here, but usually they're like around 80, 90% uptime. So that's going to take you longer to pay for those machines. That's why it's, I think, a valid critique on Marathon. Okay. But let me know what you guys think of this. I just kind of ran through the numbers here really quick on everything that I was able to gather on it. Looked at the weather data, looked at the Bitcoin transaction fees as well. And this is the best I could come up with. It could be plus or minus a couple percentage here points on what they could have actually mined here. Okay. So we'll leave it at that. We'll discuss in the comments, or maybe I think maybe today I'll do a live Q&A as well with the video. So we'll do a video premiere with live chat. That will be fun. We'll discuss it here then as well. Okay, now going to CleanSpark. So CleanSpark critique has been that they are getting miners in, but they don't have facilities for those machines, right? So we heard from Matt. I haven't really heard anything from Zach, but I know Matt has stated that they are looking to do M&As potentially, and also build out organically within their own facilities that they can grow their hash or grow their megawatts there. So that is obviously also a valid point there, but with miners being on schedule to come in here, the issue becomes is, do you have machines sitting in boxes at that point that are just basically sitting where you have to pay for them and they're not generating any revenue for you, right? So what is that cost of revenue potentially going to be if these machines don't get energized within the next basically 5 months through June, right? This is their schedule here to get to 20 exahash. So down here, all of these above are to get to 20 exahash. We're supposed to get to 16 exahash, which would be all of these here getting plugged in possibly in February. We know about that the electrical company is going to be plugging in or hooking up to their facility to get them to the 16 exahash there. So that should be okay there. Those have been installed for the last, I think, since December potentially, early January potentially. So that's not a big deal there. That's only a month off. That's not too bad. But the concern here is with the next 4 exahash that we have, 4.4 being delivered here, along with the 12 exahash down here. So I ran some numbers on this. I wanted to kind of figure out what would that cost be on it going forward if they don't get those things installed and energized within the next 6 months. So obviously the big concern here is that we haven't heard anything from Zach or Matt regarding mergers and acquisitions. What are they doing with their own facilities? And I think that's a fair critique, right? So if we look at the numbers here on this sheet here, I basically plugged in all the numbers over there, just brought it over to another table here, and hopefully we can squeeze this all in. Yep. Okay. So we have the delivery dates of when things are supposed to come in. This is the petahash of the miners, the number of miners, the terahash of the miners as well, what they could be generating here right now. So we're basically using the numbers for January right now. I went to what to mine, plugged in the numbers, and this is basically what they could possibly generate right now. At Bitcoin being at 43,000, that's kind of where the average Bitcoin price is anyways for the month of January so far. And then I'm just using, I think I'm using, is it 31 days or 30 days here? I'm using 31 days. So one more day extra, so we're actually making it a little bit more costly for them than it probably would, because February's got like, what, 28 days, I believe in it. So that's just the numbers there, okay? So it might be a day higher than normal for a couple of the months. But here's what we have as far as revenue from all of these machines. So you get about 1 million for these machines coming in here in January, February, March. April would then jump up to about 2.6, and then May would be approximately 1.3, and that's because I'm doing the halving. At that point, your revenue gets cut in half, basically. So that's why that's cut in half. And then come April, we got the 4 exahash, 4 exahash, and 4 exahash, April, May, June, right? Coming in, that's about 5 million here. If Bitcoin stays where it's at, network hash rate stays where it's at, that's kind of what we're going by here. So then I just spilled this over into here, going into each month, potentially what they could be generating, right? And we also know that the miners, when they get installed, they typically don't operate for the full month. I usually use about like 20 days on average for miners being installed in that particular month. But we're using the full month here just as an example. So again, might be a little bit higher than what it is. But nonetheless, if we take a look at all of this information here, what they could have had in each month, going from January, February, March, April, May to all the way to June, we can see here by this time, it's going to add up quite a bit. So the first month, not too big of a loss, only 1 million, right? February, if they're not energized by February, by the end of February, basically, you're looking at 2 million in lost revenue. By March, you're looking at about 3 million in revenue. And then when we get into April, once you start getting these, more miners of, well, what's that going to be? 20,000 miners of the 200 terahash miners, you're looking at now 10.7 million. And then you get to 16.9. So then it starts getting really expensive for not having those things operating. And then when you get to June, when they possibly should be all energized at that time based on delivery schedules, you're looking at 23.2 million at that time. So if the miners don't get plugged in within the next 6 months at all, you're looking at a total loss here of potential revenue of 57 million. So that's definitely sizable, right? It's basically, it would be half of what Marathon could potentially lose in revenue for only 4 months of operating the way they are right now. But this is, or 2 months, right? Because Marathon's losing about 25 million right now. So it's basically 2 months of Marathon's revenue. But it's still substantial here. So I think this is also a fair critique from those that are saying, where are the machines going? Which places are they going to be put in? And that I see it as a fair critique, right? We would like to definitely hear from Matt or Zach as far as what is going on there. If they can provide some updates on that, I think that would be very nice of them. Same with Fred, providing us with what's going on with their facilities. Why are they down so much in the last couple of days? What's the reason for it? If the reason is that you're only allowed a certain amount of electricity each month, and then some months you can bump it up a little bit or use more of it, but then the following month you have to curtail more, well, explain that. I think it's only fair for investors to know that as well. Okay? So that is it. I hope you guys enjoyed it. If you guys have any questions on this, shoot me in the comments. We'll obviously chat with the live chat here coming up when we do the premiere on this. But other than that, we'll have to see how things progress. And then always, spreadsheets are available to my Patreon members for everyone that's joined there. I think all the tiers have access to it. Then we also have the private Discord channel as well, where we discuss all of the stuff as well. Got a great bunch of guys and gals there. Great conversations going on there. And that's still $8 a month. Still plenty of spaces in that price tier. And I think that's it. Link is down in the description for you guys. And as always, if you guys enjoyed the video, please hit the like button, subscribe. Helps me out tremendously. Helps the channel out. Helps me grow, get to new audiences as well. So it helps the YouTube algorithm. So that is it. Appreciate you all for watching. Hope you guys have a wonderful evening. I'll see you guys in the next one. Until then.